there's been a long-standing relationship between JPMorgan and the federal government. JPMorgan, as far as I'm concerned, has long been an agent and partner of the federal government.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we're going to be digging into the silver market, shockingly enough, although with a lot of interesting things happening. December deliveries coming up, JPMorgan being fined, JPMorgan making a lot of money in the precious metals market as well, as we found out earlier this week. So today we have noted author Stuart Englert joining me on the show. It's going to be Stuart's second appearance on the show. Though some of you met Stuart at Silverfest, and Stuart is the author of Rigged, exposing the largest financial fraud in history, which could be close to unraveling. In either case, Stuart, welcome on in here. Nice to see you again. And how's everything going today?
It's going well, Chris. Good to be on with you for a second time on Arcadia Economics. And I love that big silver stack behind you. Looks like you loaded up the truck today when prices fell.
Yeah, well, I called Miles Franklin, or better yet, I emailed at Arcadia at Miles Franklin, one of these sponsors to the show where people can buy or sell precious metals. And that's what they delivered. Took a couple Brinks trucks, but we got it here. Stuart, there's a lot of people, a lot of the banks are talking about buying silver now. A lot's happened in the last couple months, especially this year. Where do you see this? We saw JPMorgan fined. Where is all of this at this point?
Well, it looks like this is a rinse and repeat. We've seen this same show going on for 10 years or more. The bullion banks get in trouble with their shorts, and so they smash the price down. And I'm just so used to this. I don't see it out of the norm anymore, and the fines and charges against the banks for spoofing apps has absolutely no effect because JPMorgan's still making money doing this trading.
Yeah, it's actually interesting because here, this is on September 29th, JPMorgan to pay $920 million. And, I'm sure it's not an apples to apples comparison, but here's JPMorgan dominates gold market. Wait. Dominates gold market. That sounds like a nice free market term. Like, slide in here, call it normal. But they paid $920 million, made $1 billion, and now they are dominating. Is anyone else that has a problem with them dominating after we just found out how they dominate the market?
I don't think anybody's surprised by it anymore. Like I said, we've seen this show played before, over and over and over. It's a rerun. Yes, they do dominate the market, and they're making money doing it and paying their fines, which are a cost of doing business, it appears.
Well, yeah, it does seem that way. I'm assuming you haven't been reimbursed for any gold or silver spoofing losses yet, but just goes right back into the treasury normally, it seems.
That's the way it works.
So speaking of JPMorgan, you mentioned you did an interview, I believe it was Palisade Radio a couple of weeks ago. You talked about the relationship between JPMorgan and the government. Sometimes I wonder if they're not one and the same. All of these banks, I mean, we saw Hank Paulson, and then you had, what's his name, Mnuchin, and as part of the Treasury. What can you say about the relationship, JPMorgan, but any of these banks and the government?
Well, there's been a long-standing relationship between JPMorgan and the federal government. JPMorgan, as far as I'm concerned, has long been an agent and partner of the federal government. Did you know that in 1893, JPMorgan bailed out the federal government and ended the financial panic by exchanging $60 million in gold for government bonds. JPMorgan and the U.S. government have a symbiotic relation, ever since. And I guess you could say they're joined at the hip. If the bank gets in trouble, the U.S. Treasury and the Federal Reserve ride to the rescue, bail it out, along with the other two big to fail Wall Street banks and their bankers. Meanwhile, as the nation's largest bank, JPMorgan supports the federal government by lending and trading the U.S. dollar around the world and helping maintain its status as the global reserve currency. I truly find it ironic that banker James Pierpont Morgan in 1912 said, "Money is gold and nothing else." Yet today, more than a century later, JPMorgan and the Bullion Investment Bank helped the government manipulate the monetary metals and suppress their prices. That's truly irony to me.
Well, I mean, where to begin on today's economy, and it's an ironic place. Yet there's still interesting. JP Morgan was fined, and yet there's many who still say, well, they spoofed. They weren't manipulating or suppressing it lower. I think there's a variety of times where the market does not follow what is remotely happening on the underlying physical gold and silver market. So whatever word you want to use, but what would you say to someone who says it's manipulated but not suppressed? Or I guess to anyone who thinks it's not lower than it would otherwise be.
Well, I think that the pounding that we see when they pour these, derivatives on there is indicative that they're driving it lower when they need to get out of their short positions. I mean, we've seen it in the last couple of days. I think they're trying to save themselves some losses by pounding the metal down, and then it'll go back up for a while, and then I suppose they'll pound it again.
So you mean something like that, where the price falls off a cliff, accompanied with massive increase in volume, incidentally exactly what Bart Schulten confirmed and described in that interview?
Yeah, that's what I'm talking about, Chris.
Oh,
yeah.
Well,
that waterfall trend, the big cascade of silver's decline.
Well, I mean, it just is incredible where we have this. Last year, Department of Justice says they're a criminal racket, and then here, it's just business as usual, 1 billion, and they're dominating the market. I wonder what that means, dominating. I guess is an arbitrary word, but
well, they're the nation's largest bank, and they're a bullion bank. So yes, they're dominating the market. That's right, but it's not a free market. That's the problem.
Certainly is not. And a couple of other topics I wrote down after hearing your interview. Speaking of not being a free market, how does the Exchange Stabilization Fund get involved in that process?
Exchange Stabilization Fund. I took some notes as well. And, the ESF, as it's known, was authorized by the 1934 Gold Reserve Act. The act allows the Treasury to intervene in currency and financial markets to defend and support the dollar's value. If you go to the Treasury's website, it says that the Treasury Secretary, with the President's approval, can deal in gold, foreign exchange, and other instruments of credit and securities. Now, this is an intervention, I should say, of the currency markets. It's a manipulation. If you and I were doing that, Chris, we'd be in trouble. It would be illegal, but it's legal for the federal government. In other words, the ESF, this fund, makes financial fraud and manipulation legal for the government, it appears to me. So welcome to the two-tiered justice system, one for the plebes like us and another for the federal government. Ironically, the ESF was seeded with $2 billion in profit from the gold surrendered by American citizens during the Great Depression. I've estimated that about 4,300 metric tons of gold was turned over to the federal government in the early 1930s. And the law originally authorizing the ESF was amended in the late 1970s, but to this day, it can be and is used to intervene in currency and financial markets, including the metals market with the help of the central and bullion banks using gold swaps and leases. You know, in my book, I pulled out a quote from the minutes of a 1995 meeting of the Federal Reserve Open Market Committee. During that meeting, Virgil Mattingly, who was the Federal Reserve's chief legal advisor at the time, said swapping gold is perfectly legal. And he claimed the law establishing the ESF permits gold swaps. Here's a direct quote from him. It's pretty clear that these ESF operations are authorized. I don't think there is a legal problem in terms of the authority. The statute or the law establishing the ESF is very broadly worded in terms of words like credit, and it covers things like the gold swaps, and it confers broad authority. He was talking about it confers broad authority to the Treasury Secretary to manipulate the markets when they need to. And I think that's what they've been doing with the help of the bullion banks and the central banks ever since.
Yeah, it seems to be the script for the most part there. And Stuart, I got a question because, you know, again, I went to a public school, so I might be a little slow, but I'm a little confused because you've talked before, you talked just now about the history of gold as money. So gold was important enough that the dollar used to be backed by it. I like that you said people who surrendered their gold to the government. It was a good choice of words. All the other things that have gone on, Bretton Woods, collapse of the London gold pool. So given that, does it seem a little odd that the guy who was in charge of all of this a couple of years later would say something like...
But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
Thank you. Mr. Chairman, thank you very much.
But let me just...
So, I mean, it's kind of like JPMorgan where, you know, on one hand, they're dominating the market after they've been rigging it, making more money than they paid in fines, yet, and nobody notices or has an issue with that. Same thing here. It seems like gold, it shouldn't be like Roman calculus or some exotic subject that he has no access to or no ability to comprehend or to pick up a book. Or, I mean, too bad your book wasn't out back when he was there, but is there a problem with any of that?
Well, you know, the quote that Bernanke had in 2011 when he testified before Congress, I don't know if you recall that or not, but you know, I've always been amazed by that quote. Representative Ron Paul asked Bernanke if gold was money at the time, and Bernanke replied no, and referred to the precious metal as an asset, okay? And then when Paul, you know, pursued it further and inquired why central banks hold gold, you know, we know they hold, what, 34,000 tons of gold. Bernanke said, well, it's a tradition. It's a long-term tradition. I mean, you know, come on. While Bernanke was correct that gold is not used in everyday, you know, retail exchanges nowadays, this claim by him that it's just held by the central banks for tradition's sake, it was disingenuous at best, and to me, outright deceitful. You know, central banks wouldn't hoard and amass gold like they do if it didn't have enduring value as money. They wouldn't lease and swap gold to suppress its price if it didn't compete with the US dollar and the other fiat currencies around the world.
Yeah, well, but no, it's just tradition, and all those COMEX delivery notices, those are just, you know, they're acting out a play, I'm sure. Nothing to see here. Stuart, I know you got a little silver history for us today as well. What happened with the Silver Purchase Act?
Right. Well, the Great Depression was a deflationary period, okay? Prices were going down for commodities, including silver. So in response, Congress passed the 1934 Silver Purchase Act, which nationalized silver stocks and domestic mine production so the government could control and set the price. Sounds familiar, doesn't it? So President Roosevelt, Franklin Roosevelt, ordered all silver stocks to be delivered to the U.S. Mint to be stored or made into coins. And the U.S. Treasury paid rates well over market value. That's kind of converse to what's going on now. But it helped raise the price of silver from 45 cents an ounce to 81 cents an ounce. Can you imagine? We're moaning today about $23 an ounce. But back in the 30s and 40s, it was, 45 to 80 cents an ounce. Well, anyway, during this time, Roosevelt also purchased a large amount of silver from the world markets, from other countries. And this increased the price of silver worldwide. Although most countries were on the gold standard at the time, China still used the silver standard for its currency. And this dramatic rise in the silver price forced the Chinese to abandon the silver standard that they were under. Whether that was a coincidence or intentional, I really don't know. Now, ironically, 30 years later, the US government removed silver from the nation's coinage due to a feared silver shortage. President Lyndon Johnson said before he signed the Coinage Act of 1965, here's a quote from him: "If we had not done so, we would have risked chronic shortages in the near future." There was a lot more industrial demand for silver in the 1960s, I guess, than there was in the 1930s. But once again, the goal was government control of the silver price. Does that sound familiar? Chris, you're probably too young to remember when dimes and quarters contained silver. Today, those old coins are called junk silver, but it's truly not junk at all. In fact, the silver in those coins is worth multiples, say 16 to 26 times their face value. And I've got something from the past here I wanted to show you and your readers. Have you ever seen one of these?
I've not seen the $10 silver certificate, no.
This is a $10 silver certificate that my mother gave to me. And here is a $1 silver certificate that she gave to me. These are from 1934 and 1935. And it used to be able to take one of these silver certificates into the bank and exchange it for one of these, okay? This is a Morgan silver dollar and a peace dollar. And that all came to a screeching halt in 1968. The first US silver certificates were issued in 1878, and the last one was issued in 1964. They initially were produced in response to political pressure from silver advocates, like ourselves, I guess, who opposed the Fourth Coinage Act, which ended the free coinage of silver and put the nation entirely on the gold standard. In the 1890s, the law became known as the crime of 1873 by silver proponents. These included farmers, silver miners, presidential candidate William Jennings Bryan, who was the Democrat candidate at the time, and others in what was known as the free silver movement. I wish we had some free silver. But anyway, they supported unlimited coinage of silver and bimetallism over the gold standard that was supported by the bankers and financial establishment at the time. As far as I can see it, not a lot has changed. The government's continuing to manipulate and control the price of silver, and the banks the central banks and governments hoard gold, but they don't want to monetize silver, which would be to the benefit of the average people like us who hold silver.
Yeah, well, why let them get in the way? So anyway, you did mention free silver, and fortunately, that's coming back to the Arcadia channel this Silver December to remember, Stuart. So if you want to hit the subscription button, the notification bell, we'll be giving away a lot of silver, and that's one way you can find it, or maybe Santa will hook it up. Although, Stuart, it's funny, as you were mentioning, really the dynamics that were left within the market. Reminded me of something that came out earlier this week where, yeah, Hershey revealed as a big trader that roiled the New York cocoa futures. And here we see the latest twist in the standoff has Hershey to take unorthodox steps to secure physical cocoa through the ICE futures exchange directly. So it seems like a company, I mean, I don't know if you call them an industrial user, but the equivalent of the silver industrial users, someone said, hey, we're getting our supply now. We don't know what's going on here. Is that what you think? And again, the way you described silver shooting up to 81 cents, kind of similar to what we see here. Is that perhaps where this is headed?
I'm not familiar with this cocoa chocolate story here at all.
It's a delicious one.
Yeah, it looks like somebody is playing with the cocoa, so to speak, and that would certainly drive up the price of a candy bar, would it not? If cocoa prices go that high? What is that in U.S. dollars?
On some level, I don't know how much chocolate is in some of the candy they're out there selling these days, but yeah, I mean, it'll be interesting to see how this one unravels.
That says you at $250 per metric ton, right?
Yeah, I'm not quite sure how to read this one. It looks like it's below zero there. So again, kids, before you trade this, go and do your own homework. But it looks like it went up quite a bit here.
Yeah.
In response to the squeeze. So anyway, I guess, Stuart, any final thoughts as we round out 2020? What are you expecting, how this plays out? I guess we've had the fine now, and it seems like the market still gets spoofed plenty. So does this just keep going until someone pulls a cocoa-like move and says, I want my silver now? Are we headed that way, or how does it end?
The only way I can see it ending is when enough people demand physical gold and silver. And I think the more debt that the federal government piles on, the more we're going to see pressure on the dollar and inflationary trends. And that's the only thing that's going to break this suppression scheme. The nation's economic trajectory won't change if Joe Biden is inaugurated in January, especially if Democrats take over the Senate and Congress buys in this so-called modern monetary theory, which really is just a rebranded infinite currency creation, or if they bankroll this Green New Deal that's been being promoted by the globalists and the leftists in this country. Some people perceive a great difference between Democrats and Republicans. And I guess on social issues, they are different. But when it comes to debt and fiscal policy, they're pretty much one and the same as far as I'm concerned. Burgeoning debt is a bipartisan issue that both parties have foisted upon the nation. The only difference, as I see it, between the two major parties is how they distribute, the federal largesse and who gets the most government pork, but like his predecessors, President Trump was no fiscal conservative at all. When Trump came into office in 2017, the national debt was below 20 trillion, and today it's over 27 trillion and rising fast. So I say, regardless of who holds the Oval Office next year, the debt is going to continue to rise. The only question is how fast and who gets the most goodies, I guess. The massive bailouts and handouts we've seen, are just indicative of, I think, a sick economy. And it's not just due to COVID lockdowns and business shutdowns. It's due to decades of profligate government spending and massive debt. The federal government can't seem to apply enough liquidity to extinguish the debt firestorm. The Fed needs a much bigger hose or a much bigger helicopter than Ben Bernanke ever imagined. Plus, the fact that Senate Republicans haven't been able to confirm Judy Shelton's nomination to the Federal Reserve Board is further evidence that the Republicans in Congress are not fiscal conservatives. They'd rather not hear about fiscal responsibility or sound money issues. So along with the Democrats, they keep kicking the debt can down the road, and that's where we're at. And I think Congress is going to be talking about the debt ceiling after the election again. But what the heck does this debt ceiling matter if your house has got no damn roof? I mean, we're going to see more of the same, more debt, and to me, that should put a floor under gold and silver prices.
Yeah, and Stuart, I like how you mentioned that we don't have fiscal conservatives in there. Yeah, that certainly is the truth. Can you let folks know one more time about the book, where they can find it, and what they're going to get inside the book?
Sure. Well, I published it in January, and it's done much better than I thought. It's actually been sold in not only across the United States, but 10 foreign countries. And it's available on Amazon and other online book retailers. If somebody would like a signed copy of it, they can email me directly, and I can tell them how they can get a copy. My direct email address is srenglert, ENGLERT, @comcast.net. And I'd be willing to sell them a book if they'd like one with my signature. So I appreciate you promoting the book. I know you've got a book too, and both of us have been doing pretty well in the monetary metals and money category. And that's good to see. That's good to see, Chris. The word's getting out.
Yeah, well, I mean, I think you can only keep the secret for so long, and it's becoming somewhat obvious and silly with the theatrics that are going on. But hey, we just I didn't make it up. You didn't make it up. We're just reporting what's out there. So I appreciate you doing that. I think it's a valuable book for people to understand what is going on. So Stuart, thank you again for joining me. And folks at home, Stuart talked a lot about the key being the physical market, and to find out what is happening, even on a rough, choppy week like this one, to find out what's happening on the physical level, here it is coming your way now.